And because of what's happened in the venture capital market, venture capitalists have tended to move more upstream and have moved away from some of the real early stage companies. So it's really important now for an entrepreneur to be able to locate angel investors, and not just friends and family for the initial financing round, but also that Series A, that first significant financing, now tends to be being done by angels and what are called super angels. When you're doing the initial financing for a company, we call that the friends and family round. Those are usually under $500,000 of financings for companies, and those are typically made up of literally friends and family, people that know you, that have a lot of confidence in you as an individual, so that their investment decision is based upon the relationship as opposed to really the company. Once you've raised that initial $250,000 to $500,000, you then move into a more professional angels status. Now there's a new class of angel investors that are called super angels, and that's really very much of a Silicon Valley phenomena. And these are individuals who didn't just make some money from a prior company, but made a lot of money. And they literally have replaced the early stage venture capital funds. So whereas before really 2007, 2008, when we would have a typical angel financing would be $1 million, $1.5 million would be a very large angel financing, we're now seeing angel financings that are the size of what was traditionally a Series A venture financing. So when companies come in to me and they want to know how they can attract angels and super angels, one of the first things that I tell them to do is it's really important that you professionalize the company. So what does that mean? It means you need to have a clean cap table. It means you should try to keep the number of investors on the relatively lower end of the scale, because when it comes time to deal with venture capital investors, the more investors you have, the more difficult it is for the venture capitalists to get involved. We also definitely advise companies to get their patent portfolio in shape as quickly as possible, because for the angels, the name of the game is it's not just this financing. They want to make sure that that company is going to get venture capital after their investment. And so I do believe that the trend is going to be more super angels and more angels financing companies through that Series A process as more of the venture capital funds move towards later stage investing.